Let's review the Columbus Tech Exchange performance for the week ended Friday, July 24, 2026. To start, how did the market perform overall during the week?
Yes, Vidya. It was a relatively weak performance week for the market. The SPI declined by 1.10% to close at 21,172.74, while the S&P SL lost 0.89%, ended the week at 1,950.91. The market experienced volatility throughout the week despite some recovery towards Friday.
Looking at daily performance, the ASPI started the week at 21,405 on July 17 and dropped to 21,208 on Monday. What drove this sharp decline?
Monday saw the biggest decline of the week as investors continued profit taking following previous market gains. Although turnover improved significantly, selling pressure in large cap stocks weighed heavily on the both indices.
Speaking of turnover, the market recorded a total turnover of 12.97 billion rupees during the week. Which day contributed the most?
Okay. The highest turnover was recorded on Wednesday, July 22nd at 3.53 billion rupees, followed by Tuesday 3.28 billion rupees. These two sessions accounted for more than half of the week's total turnover, indicating strong investor participation during the middle of the week.
Thursday's turnover, however, dropped sharply to just 1.08 billion rupees. What does this suggest?
Yes. The decline suggests investors adopted a cautious approach after the heavy trading activity earlier in the week. Lower turnover generally reflects reduced participation as investors wait for the new market catalyst.
Crossing also seemed to have played a significant role. The week recorded 8.48 billion rupees worth of crossing. How significant is that?
Very significant. Crossings represent about 65% of the total market turnover, indicating that institutional and negotiated transaction dominated trading activity. This means a substantial portion of the week's turnover came from large off-broad traders rather than regular market transactions.
Okay, despite the weekly decline, the ASPI recovered slightly from 21,149 on Wednesday to 21,199 on Thursday. Should investors view this as a sign of stability?
It does indicate that selling pressure is during the latter part of the week. While the recovery wasn't enough to erase the week losses, the market found support around 21,150 to 21,200 levels. Recent buyers were willing to step in at lower price.
What does this week's trading activity tell us about investor sentiment?
Overall sentiment remained cautious. Although institutional investors remained active as reflected by the high value of crossings, retail participation was relatively subdued. Investors appear to be waiting for fresh earnings announcements and macroeconomic developments before taking larger positions.
Finally, what's your overall takeaway about this week's market performance?
Yes, Vidya. The market ended the week lower, with both SPI down 1.1% and the S&P SL down 0.89%. However, healthy turnover of nearly 13 billion rupees coupled with crossings accounted for 65% of trading. It shows that institutional interests remain intact. Going forward, investors will closely monitor corporate earnings, economic data, and foreign participation to determine the market next direction.
Thank you for insights and that wrap up this week's market recap. Join us next week for another update.
Thank you for watching and stay tuned with Century Research.